Hi, I'm Michael Yardney, and you'd have to be living under a rock not to realise that our property markets are going to be very, very different in 2011, which has actually got many investors asking, what's the right type of investment for this new era? Now, they understand that the economy is running at two speeds, with some sectors doing much better than others, and they're worried that interest rates are going to continue to rise, but that property values may fall a little in some areas. They already are, and they're unlikely to boom in others. Now, add to this the fact that inflation is likely to return due to full employment, our government spending, and the new carbon taxes. Now, if we've survived the past few years, the turbulent times in our property markets, in finance and the economy, that should have taught us something. It means that we probably need to start taking a different approach to money and how we value it, how we procure it, and how we use it. So back to my original question, what's going to be the best investment in the years ahead? Now, before I explain that, I want to tell you about my brand new book, What Every Property Investor Needs to Know About Finance, Tax and the Law. Together with three of my trusted experts, Ed Chan, Rolf Schafer and Rob Belander, we're going to show you how you can build your own property investment business. So click on the links below and order your copy of this great book. It's a must-have. It's about maybe the non-sexy bits of property, about finance, tax and the law, but it's about how you can develop financial independence by building your own property investment business. Now, back to the question of what's going to be the right sort of investment in the years ahead. Now, one thing is certain, there's no such thing as a perfect investment. Now, if somebody tells you that they've found a perfect investment, be very skeptical and ask lots of questions, because chances are they're trying to sell you something. Maybe something you shouldn't be buying. Now, the things I look for are as follows. Number one, I actually look for liquidity. You know, the ability to take your money out by either selling, borrowing against, refinancing your investments. Number two, for my good investments, I look for easy management. Number three, I look for strong, stable rates of capital appreciation. Number four, I look for steady cash flow. Number five, I actually look for a hedge against inflation. And then also, I want something that's going to give me good tax benefits. Now, when you look at the major categories of investments, you're going to recognise that not many fit the bill when it comes to all those components. Not all, they don't fit all those criteria. Now, the instability of our world economic markets and the fickle nature of our local property markets means you're going to have to invest in this new era in assets that are both powerful and stable. Now, by powerful, I mean they've got to act as a hedge against inflation, because that's coming back. They must have the ability to grow it high at actually what I call wealth-producing rates of growth. In other words, you're going to have to be able to borrow and leverage against them to make them work well. Now, by stable, what I mean is your investments should grow in a steady fashion without those wild fluctuations that some assets have in their value. Now, many investments are powerful and many are stable, but only a few are both. Prime residential real estate is one of the investment vehicles that has both power and stability in spades. Now, don't get me wrong, that doesn't mean it's perfect, because property is not a liquid asset. It's not as liquid as most investments. You know, it can take you months to cash out if you want to sell your property, or maybe a bit quicker, but it still takes some time if you want to borrow against the increasing value of your property. That could even take, sometimes in the current environment, take months. Now, while some of you may see this as an issue, I would argue that the relative lack of liquidity is one of the virtues of property as an investment vehicle. Okay, why do I say that? Because the only way an investment achieves liquidity is to relinquish some of its stability. If it's liquid, you know, easy to sell like shares, it's more likely to have more volatile fluctuations in value. Now, let's just examine this concept a little further, looking at the stock market. The stock market is another potentially powerful investment vehicle, because you can borrow against it to purchase your shares. You know, they call it buying on margin. But in order to achieve the liquidity that the stock market provides, you give up some stability. You know, share prices are really volatile. They fluctuate up and down, and then down and up. And, you know, not just over weeks or months, from day to day. Sure, you can get your money out quickly, but you also run a bigger risk of making a loss. Okay, well, there's only one other thing, I guess, putting your money in the bank in a savings account. Now, while this is both very liquid and very stable, it just won't give you wealth-producing rates of return, will it? And if I had a choice, and you know I do, I'd take stability. In other words, the lack of the big swings in price over liquidity every time. Now, by the way, some types of property are much more stable than others. That's why I like investing in capital cities where there's a big population base, which means there's always going to be buyers and tenants for my property. Of course, that's only if I own the right type of property. And these large cities have a sizable economic base, which means they're not heavily reliant on one or two industries. So this makes my investments stable. Now, don't misunderstand me. Not all properties are stable. Those who've invested recently in mining towns, in many regional areas, in holiday locations like the Gold Coast, they've suffered huge falls in the value of some of their properties, haven't they? Now, here's another way to look at what's going to make a good investment in the future. Many financial planners and others recommend what I'd call when-to investments, which means you have to know when to buy and when to sell. Timing is crucial with these investments. If you buy low and sell high, you do well. If you get your timing wrong, your money can be wiped out. Shares, commodities and futures tend to be what I call when-to investments. I'd rather put my money into a how-to investment, such as real estate, which increases steadily in value. And it doesn't have those wild fluctuations, those wild variations in prices. Again, with the caveat, if and only if you own the right type of property. Yet real estate's still powerful enough to generate wealth-producing rates of returns, partly through the benefits of leverage. While timing is still important in how-to investments, it's nowhere near as important as how you buy them, how you add value. The problem is how-to investments are rarely liquid, but they produce real wealth. Most when-to investment vehicles, like the stock market, produce only a handful of large winners, and there tend to be millions of losers. On the other hand, real estate produces millions and millions of wealthy people. Anyone who bought their own home in Australia years ago is now wealthy, and it only has produced a handful of losers. Having said that, if you also get the timing right with property investments, if you buy at the right time of the cycle, you can massively accelerate your investment returns. And with the next stage of the property cycle upon us, this stage is going to create a group of property multimillionaires. But if history repeats itself, and it surely will, many are going to lose it. Many are going to get it wrong. I guess the figures show, in fact, that most investors will get it wrong. They won't ever develop the financial independence they deserve. It's in part because you just can't buy any property today and hope it's going to make a good investment. Markets are being very selective. Most properties aren't what I'd call investment grade properties. And the other thing is you just can't listen to anybody's advice. You know, those who are coming up with a seminar today saying, come to my weekend seminar and you won't have to go back to your job, or you're going to be able to retire by the end of the year. However, there are some great opportunities out there right now. Now, if you want to be one of the successful property investors and benefit from the opportunities that 2011 and the years ahead are going to bring, and more importantly, if you want to avoid the 5 surefire ways to lose money in property that I'm seeing many investors heading for, I encourage you to join me along with finance expert Rolf Schaefer and Ken Race from leading property accounting firm Chan & Naylor for our upcoming seminars, which I've called our Property Market Update 2011 and beyond. These intensive one-day sessions are going to be held in Melbourne, Sydney, Brisbane and Perth during March and April. And you shouldn't miss them if you're serious about creating wealth through residential real estate. We're going to give you the strategies that you need to take advantage of the current opportunities, and there are some abounding in this market. We're going to debunk many of the myths perpetuated by the media, and we're going to explain what's really going on in Australia's economy and the housing sector. So click below to find out more and join us at one of these seminars, and when you do, you're going to get over $300 worth of free gifts, including you can bring a friend for free. So please don't miss out. Click on the link below. Of course, in between now and then, I'm going to keep you up to date with what's going on in future updates. But it's actually probably a really good time to remind you that in changing times like this, no one can help you quite like the independent property investment strategists at Metropole. Remember, our multi-award winning team have got no properties for sale, which means their advice is independent and unbiased. And that's probably one of the reasons that they had more votes in the recent Your Investment Property Magazine Awards than any other company in Australia. And if you want to really find out what's happening in your local market and what some of our research is suggesting is in store, why don't you join us at a free property briefing at our offices in Melbourne, Sydney and Brisbane, or with our associates in Perth. There's also a tab down below that you can click for that. Last little message, with so much happening in our property markets nowadays, I'm actually writing a blog every day. Click on the Michael's blog link up at the top of this page and please subscribe to it. Now that's a different subscription to the newsletter. It gives you my short daily updates. I look forward to catching up with you in a couple of weeks for my next update. In the meantime, why don't you get that great book, What Every Property Investor Needs to Know About Finance, Tax and the Law. This is Michael Yardney. Have a great week and make it a great one.